The stock markets around the world are rising in hopes that the government stimulus will fix all issues. The Fed has been hard at work pumping up anything and everything, leaving many to suggest why even have a market if the Fed will simply backstop anything that will fail. What we are seeing right now is just the beginning because the cascading of failures has yet to happen. Can the Fed really bail everything out without massive hyperinflation? You came here for the truth, so let me unveil that for you. A lot to discuss in this video today. We are going to look at everything, including what's going on with gold, what happened back in 2008. I've got data from Norway and Mexico and a lot that you need to know. So let's begin with the markets themselves. My goodness, what a day it was. The Dow Jones went up over 2,000 points. The S&P over 200 points. It did very well, particularly after that 2 p.m. part of the day when the PPT loves to come in. But it was already up on the day, but certainly the afternoon is when it usually does a very good job. This is all based on the stimulus packages by the United States, as well as all of the other countries around the world that are in the process of putting them out there. The Dow's best day since 1933, the yellow line there, March 24th, 2020. You can see the comparison in percentage terms. Certainly has been a very good day today. Here you can see the stock market turmoil. It's been aggressively up and down just about every single trading day. Where this stops, nobody knows. Looking for a bottom. I want to show you something here on this chart, and I pointed it out in the previous trading day, but now we can see this happening before our very eyes. This has been trending downward, everybody knows that, but look along the way. There have been the spike upward that, really has made some investors out there buy into them, and that's what happened with a 2,000 point rise in today's trading session. But even Jim Cramer is warning about this. We'll talk about that more in a minute. Look at the volume. It is so exaggerated right here. It is off the charts. And look at the Dow daily change. There have only been a few instances when it has moved up to this level. When you see the stock market adding or taking away a year's worth of gains in a moment, it's not a healthy market on the way up and on the way down. People need to be concerned about this. We've seen this before, of course. In this instance here, we're looking at a massive increase in the Dow and where it has gone just in one trading session. But a similar thing occurred just a few days ago, 9.75% upward, and we saw what followed. Not very good. I think we really need to see some solid data coming out, and as of this moment, we're not getting that. So these rallies here that go on are in hope that there will be stimulus, that the Federal Reserve is going to be there to backstop the losses and so on. That's very positive for the markets. I talked about this on Instagram. I know I talked about this on my YouTube before. That is very supportive, and it tries to put a crutch into the system, just as they have been doing for well over a decade. This is just to a more exaggerated extent because we have QE4, QE5, and basically QE infinity going on all at the same time. The Federal Reserve has gone to lengths it has never gone before. The question that I posed in the introduction was that if everything starts to fall, you just see all different types of assets falling, real estate's falling, and stocks are falling, and bonds are falling, and everything is just doing poorly. Is the Fed going to go in and make sure that there's a floor on every single one of these assets? They can certainly try. Right now, at this time, they're trying that. The question, of course, is will they be able to do it without causing hyperinflation? Helicopter money isn't so one-sided. European markets perform very well, of course, and that was expected. Nothing's been resolved. Everything actually looks worse than it did the day before, but don't worry about it because stimulus is there to save you. Days turn months. In aggregate, 1.7 months of gains had been lost every day. This is extreme. We are seeing such volatility despite the fact that the VIX has gone down 20 points from its highest. The truth of the matter is that it is looking so ridiculous right now. There is so much uncertainty going on, and that should be giving investors a reason to just pull back and assess the situation. Norwegian Cruise Lines, MGM Resorts, and American Airlines Group were all up at least 33%. Think about this for a second here. These companies here getting absolutely punished, and in the future, whether we're looking at short term or medium term, they look just as bad, and yet they go up 33%. This is when you know the machines are running the show. The cruise lines, the casinos, the airlines, all of these are basically shut down or shutting down. This is bad news all around. Printing a bunch of money is not going to fix that. Check out this ridiculous quote. Everyone was prepared for a set of shockers, and that is precisely what we got. But they are not a surprise. It is at times like this that the market's propensity to look forward is demonstrated most effectively. That's right, ignore all the bad news. So here you are, you're the investor, and you got some information that's right ahead of you, and it looks quite bad. Let's label it B, okay? And all of this is just coming forward. There's nothing but bad news, but you don't have to worry because all the way down here might be 10 years from now, it might be 5 years from now. You have no idea. Well, there's some good news. So we can just ignore all of this bad news and look to the good news. That's right. Why not even just get rid of this entirely? Let's draw a rainbow here. Let's draw some flowers here, and let's look towards that. Why not just do that as investors? Why not program the computer algorithms to be stupid as hell and ignore the information that's in front of our face, and we'll look at the rainbows and flowers? Really quickly, retail stocks are getting pummeled. All around the world, we're seeing this. The XRT retail ETF has fallen 33% in March, its worst month ever. Imagine this is on the back of all of the retail slowing down we've been seeing, and in 1 month, it falls even further. So you could see that slide that was happening down, and then suddenly it just drops off a cliff. Couple quick updates here, looking at WTI crude at $25 a barrel, Brent crude at about $30 a barrel. This has come up along with the markets. As we have seen the central banks, particularly the Federal Reserve, commit to devaluing the currencies, as a result, real assets, in this case here, gold and silver, have risen. Okay, when we're looking at precious metals, physical precious metals, that is very different than what we see with paper precious metals. I should do another video about this. I've done many in the past, but just to update, I know I have so many new subscribers since the last time that I did a video about this, but we're talking right now, as I show you here on the screen, 1616 for gold, 1439 for silver. This is paper. We're not talking about physical metals. Physical metals are in short supply at this time. But regardless, this can increase nominally as the Federal Reserve, as the other central banks commit to devaluing the currencies. The current economic and financial market turmoil is seemingly the perfect environment for gold. And I quote, this is Goldman Sachs, "We have long argued that gold is the currency of last resort, acting as a hedge against currency debasement when policymakers act to accommodate shocks such as the one being experienced now." In 2008, the Goldman analyst noted the November announcement of quantitative easing was the turning point. Check out this chart. Gold was also underperforming in 2008 until the Fed stepped in and removed liquidity constraints. Once they announced the quantitative easing, that was it. Gold began to rise. But previously, we had seen gold, despite all the chaos that was going on in the markets, it was falling along with everything else. But it's that currency debasement where gold is really favored. I talked about how the Federal Reserve is going to be buying corporate debt. They're going to buy ETFs of the corporate bonds. And now Federal Reserve taps BlackRock to purchase bonds for the government, world's largest money manager, by assets to purchase agency CMBS on behalf of the New York Federal Reserve. The commercial mortgage-backed securities, remember, these are derivatives, these are a bunch of garbage, and now BlackRock is, of course, going to be able to profit from this whole situation. You got to remember what's really going on here. Think about this. You got a crisis. Some companies out there are going to be given some favors thanks to your government because they're all intertwined in the revolving door. Goldman Sachs and every other company. BlackRock was around 2008. They did something similar. Now they're here again to save the day. Thanks for your help, BlackRock. And now look at the distortions that have been created. You see the Federal Reserve, they're suggesting that they're going to buy ETFs of this mortgage-backed security garbage. And what has happened? The most massive inflow into this particular ETF. Investors see what the Federal Reserve is doing and they're just copying. Does that sound like a healthy market to you? Check this out. We will see higher default rates and business failures. It could be like the 1930s. During the 30s, unemployment peaked at 25% in the United States. US economic output was 30% down. And in this paragraph right here, it's suggesting that this isn't like the 1929 situation. This isn't like what happened 2008 and 2009. Its solutions that they're trying to provide are trickier. That's very clear. What the Federal Reserve is saying that they're just there to make sure that everything runs smoothly. We're just there to provide liquidity. That's right. But they added $400 billion to their balance sheet in a matter of 1 week the last time I checked. I'm sure this is going to be around the same thing. We'll get those numbers on Thursday. It's ridiculous when I look at the charts all the time and see this massive expansion of central bank assets, and there is no possible way that this can ever reverse. We know that back in 2018, it was very clear to me at least, they tried it just a little bit around the world, just a small portion, and the entire world basically started to seize. That's not a good sign. But not everybody lost out, because individuals, the billionaires and the insiders, they happened to sell at the right time. Top executives at US traded companies sold a total of roughly $9.2 billion in shares of their own companies between the start of February and the end of last week. The selling saved the executives, including many in the financial industry, potential losses totaling $1.9 billion. That's fantastic, right? Because we don't want them to lose a lot of money. We want them to be aware of the situations before they happen so that they can sell off, they can get all the profit, and they can continue to do what they do with the revolving door. Fantastic. Economists see US facing the worst ever quarterly contraction. Let me be very clear about that. Ever. There have been some serious crises in the past. This is going to be the worst, at least on the short-term basis. My thoughts about this is that we're going to have a very, very serious contraction. I think for the most part, that's the consensus. They believe in a V-shaped recovery. So immediately we go third quarter, everything's back to normal. Where I differ in opinion from the traditional economist that's out there, it's that when we hit the bottom, something is going to break, and then we have the cascade, then we have the domino effect. They don't believe that's going to happen because the Fed is there, because the government stimulus, and so on. We'll see what happens. We've got the data from market giving us the PMIs, and it is not pretty. I posted about this on my Instagram, and you can see in this chart right here, it's fallen off a cliff. Here are the data points you need to know. Looking at this, for example, US Composite Output Index 40.5. That's a new series low. US Services Business Activity is at 39. That's a new series low. Manufacturing PMI at 49.2, 127-month low. Manufacturing output, 127-month low. Everything has been brutally beaten down, and that happened in such a short period. There's so much more to this. I'll give you the data as it comes out. Here's a chart just showing you what I was talking about. We're looking at the services PMI, manufacturing PMI, and this is just the beginning of that data, of course. We're going to find out what's really going on in the next month, because then we're going to get much worse numbers coming out of basically everywhere as the economy shut down around the world. Here we're looking at the US PMI, Eurozone PMI, Japan, China. We're all down. Everywhere you look, down, down, down. It goes from bad to worse. Tuesday's unsustainable rally is far from what investors want to see. This is Jim Cramer saying this, and the only reason I'm showing you this particular quote is this. Tuesday's rally was machine driven. That's Jim Cramer, and I happen to agree. You see, we are looking at this going down and down and down, but along the way, there's these rallies that take place, and it seems to be a big problem, but it depends on where you're looking. You see, right now, this has come up over 10%. Question is, what happens over the next week if more bad news comes along? It's not going to look very pretty. My friends in Norway, I haven't forgot about you. Information coming from all over the world. I try to bring it to you here at this channel. This is a global channel. Norway's unemployment rate soars to above 10%. This is unbelievable. It's the highest since 1930. Again, the expectation is a V-shaped recovery, but I'm not so sure because when you look at what happens, companies don't just rehire everybody back right away. They hire what they need to immediately, and then things start coming back online, and maybe 5 years down the road, maybe 10 years down the road, they've got even more employees than they did before. Who knows? But to suggest that from one quarter to the next, everything's going to be fixed seems rather unlikely. Mexico, right here, the president is saying you shouldn't expect bailouts or tax amnesties for the businesses there. No more bailouts in the style of the neoliberal period which were given to the banks to large companies. No, don't even think that there will be tax forgiveness or other mechanisms that were used before. This is big. Usually they go out there and say, we'll do anything and everything to backstop the losses. Mexico, at least on the front end, they're not pushing for it. Well, I'm going to end the video there. If you found it informative, hit that thumbs up button. If you want to support this channel, you just got to click that one button. I really do appreciate that very much. Every day I create new content for Instagram and Twitter that is not available here, that is posted faster than I do on this channel. Definitely check me out at The Money GPS. People need to understand how to make an income on the side. That's why I created this course for my subscribers. It teaches you about e-commerce and does not charge you $1,000 like the rest of those courses. It's free. It's absolutely free. Check it out, theamazongps.com. If you want to understand the financial system, how it all works, to be able to actually ask the right questions, these two books will teach you everything you need to know. Check them out at the link in the description. If you want the audiobook, themoneygps.com. Should you buy gold? That's the question many have asked. I have this video that I did a little while ago on gold. Everything I said there, still relevant right now. It's a few months ago. Check it out. I'll see you there.